Happy Market Monday, everybody. I'm Chris Bettis from Fluent Mortgage, Market Fluently. Floors and ceilings. We're going to talk about floors and ceilings and predictions for this upcoming week and kind of what transpired over the last week. All right, but last week, really what we saw was ISM fall short. Very short of expectations. However, understand reports. Even though it was below expectations, overall, the market was very high saying the economy is revving. So it's doing well because of the stimulus. It's doing well because the states have opened up. So really happy about that. The one dampener and why it fell so short is just nobody wants to work. And so there's all these vacancies, so they can't keep up with production. So that was kind of the past week, right? And we saw amazing breakthrough of the last ceiling. We'll talk about this more. Improving interest rates, but we knew it was short-lived. We knew there was nothing really to prop it up and do a new floor. We knew it was going to regress. So hopefully you locked everybody in on Thursday, right? Or worst case, Friday morning, we saw a major regression. So week to come, let's look to the screen. Really, as always, CPI, inflation. Like the biggest thing before us is hyperinflation that comes out Tuesday. On Thursday, it's going to be jobless claims. And then on Friday, kind of a couple things that are critical. Retail sales, I know they don't talk about it, but consumer sentiment is critically important. All right, so ceilings and floors. Let's look to what happened last week. So here's kind of last week, and we busted through an old ceiling. So we knew we were going to see improving rates, but there wasn't some economic fundamentals to continue to make us drive it higher and higher and higher. And we knew we were going to see Wednesday, Thursday, there was sort of an alert or warning saying, hey, they really should be starting to lock people and not be floating anymore. We did so. And then Friday, huge regression, and then we lost again today. So here's kind of the ceiling floor news moving forward. So again, even though short term, you should have locked last Thursday or Friday morning, you're in trouble if you didn't. Any new transactions, I'm personally floating. So I think we're going to see it propped up by a new floor, and we're going to bounce back and forth between those. So I think we should see some improvements throughout the week today. Long term though, higher rates, right? We know 1% to 2% higher, just we don't know when. The Feds, or at least the minutes of them, came about. So good news, they're not talking about raising rates yet. We already knew that was going to happen. But here's one of the keys, right? Half the people at this point, half of them said, do not continue the level of buying of bonds at this point. So half of them are suggesting, hey, let's slow down our purchasing of bonds. Supply and demand means it's going to start driving up interest rates. So at least for long-term money, they're starting to talk about influencing it to drive up rates. So that's the report. Don't forget to like, don't forget to subscribe, don't forget to share, but most of all, make sure you protect your clients and know when to lock or float. Chris Bettis, Fluent Mortgage, Market Fluently. We'll see you next week.